Our next guest says, though, there are signs of a potential bubble. Joining us, Matt Bauer, commodity strategist at Ned Davis Research. Matt, what concerns you here, or at least leads you to use the word bubble?
A good question. Good morning, David. Thanks for having me. Happy New Year.
Thank you.
We started out our process here looking at silver. Had an exceptional run in December. It's been on an exceptional run for some time. I think looking at a chart, it's easy to see that it's probably oversold. So we started by trying to quantify that using some moving averages, simple moving averages, comparing the price as a ratio to the moving average on both absolute price relative to gold and relative to GSCI, the commodity index. What we found was it's overbought by those metrics at levels that have rarely been seen in history, very few instances. So we decided to apply a metric, not of our design. It was actually from a paper called Bubbles for Pharma that specified 3 criteria for determining whether equities, industries, or sectors are exhibiting unusually large gains. We modified it, applied it to silver, and it met those criteria. Whether we're in a bubble or not, I think remains to be seen, but it shares the characteristics of previous significant price peaks.
Right. Now, I mean, you can stay in bubble conditions for quite a while, right? I think you even make reference back in the 1980. Now, I think that was when Bunker Hunt was trying to corner the silver market, but even from the highs when it sold off, it was still quite high, wasn't it?
Correct. In the 80s, it was such a significant run that by this definition, the bubble definition, it continued to meet it well into 1981. The return on silver was roughly 1,000%, I think, at the peak, and so it continued to meet the thresholds for this bubble criteria well into 1981. So we added another criteria to it where silver has to be at an all-time high, and obviously that can't be quantified in real time. That's really known only in hindsight. But we used the last all-time high as a marker, and then looked at what silver did from that point on, and it exhibited negative returns going forward from there.
I mean, you've talked a lot about technical analysis and charts and overbought conditions and stuff like that, Matt. What about the fundamental story here? Is there even, how do you make a case for silver fundamentally, and has anything changed that led to this abrupt historic rise?
Well, I think maybe price has gotten ahead of fundamentals. There's still a good fundamental story. The fundamental story tends to be true up until the end of bubbles. But, with a weaker U.S. dollar, strong gold, geopolitical unrest, movement away from the dollar, looking for safe haven assets, all continue to support silver and money flowing into silver.
All right, but is it time then for me to go find the silverware and, melt it down and sell it?
Don't you need it? Don't you need to use it?
No, who needs their silverware, really? I mean, it's, by the way, that's no longer on registries, I don't think. That was a total waste. What do you think, Matt?
I think patience pays off here. Going into the start of the year, so this month, we'll see the 2 large commodity indexes, the GSCI and the Bloomberg Commodity Index, go through their rebalancing. That could create some volatility in the middle of this month. Additionally, we're starting to see increased frequency of margin requirement hikes from the exchanges. That's led to the end of bubbles, losing the term loosely, in the past. We saw margin hikes in 2011, also significant hikes in the 1980 case where outright ownership was banned for a period. So those 2 contributing factors could create some weakness early on. I think the first 6 to 8 weeks will give us an indication. One thing to bear in mind is even with a significant 50% correction from here, we're still in rarefied air. Silver would still be at price levels we've only seen in 2011 and 1980.